Hey traders, welcome back. Today is Sunday, May the 15th, 2022, and this is our weekly trading preview. All right, let's go ahead and jump right into it, folks. We do have a busy week ahead of us here. Not a lot of news items on the agenda, but again, I think we're going to have some action and volatility, and that's what we're looking for as traders. Let's get into it. Let's take a look at our overall technical look in the marketplace. Now, this is a weekly signal that we're looking at here. Again, inside of our trading room, we look at the daily numbers, but this is the weekly. This is a little bit bigger picture. A little bit overall picture, if you will, and while we do have some of the indicators that are implying, or at least starting to imply, that we are getting back to neutral ratings, the overall signal is still very much in the bearish camp. We are still, in spite of the nice push-up that we had on Friday, still very, very much in a bullish setup. Down below the 100-day moving average, again, on the weekly charts, and barely just clinging on here to the 200 days. So again, we'll talk about levels here in just a second, but we continue to be in a bearish mode here. Looking at the overall markets, one of the things that I think implies that really is that we are, in spite of that really nice rally, again, that we did have on Friday, we are still below the envelope, and that's bearish. So we'll continue to look at this as we roll this out. Key support levels and resistance levels with regards to the S&P futures. Some of the areas that I'm looking at, obviously the 3950 level on the E-minis. 3950 was a huge level. It has been a huge level for quite some time. We were able to hold that as a support level and then push above it on Friday, and that was bullish. But here's the thing, folks. Look, we've had 6 weeks now of red. 6 weeks, 6 consecutive weeks of nothing but down weeks. Now, that's pretty big. We didn't even have that in 2008. I think we had maybe 4 or 5 consecutive down days in 2008. So the market's due for a bounce, regardless of whether or not we are in a bearish stance, which I do believe that we are still in a bearish position overall. We're due. We are absolutely due for a bounce here. And I think that's maybe what we saw on Friday. So the question is, starting this week, Monday, do we get a continuation there, or do we give it right back? Well, for me, again, pretty straightforward. I like to look at levels rather than try to predict a directional bias. We're looking at resistance levels now all the way up at 40.40. I'm looking again here. It is Sunday evening. Futures have been open for just a little bit here, and we're slightly positive, not incredibly positive, but slightly positive here on the E-minis, up at about 40.29. And that 40.40 level that was just above where we're at right now, 40.40 is the next big resistance area. 40.60 would be above that, and then of course the big one is 4100. If we could break above 4100, that would be a very, very bullish indicator, and it might give the bulls some momentum here to work with. Support areas, well, it's just below where we're at right now. Again, we're sitting at about 40.28, 40.27 right now as I speak on the E-minis. Support would be down at 40.20, so just down below where we're at. This is a level that really probably needs to be held if the bulls are going to have a decent shot. 40.20 would be that support level for me. And then if we fail that level, I'm back down to my 39.50 level. And if we don't hold 39.50, guys, to me, it is off to the races to the downside. 39.50 really, from a bullish standpoint, needs to hold. So again, 40.40, 40.60, and 4100 are my resistance levels as we try to move our way back up into a bullish stance. and then support would be down around 40.20, which is just down below where we're at right now. And below that, you got to go all the way down to 39.50 to play either directional bias. So right now, it does look like the market is trying to give a little bit of a continuation to the bounce that it had on Friday. But the overall bias is still very much bearish in terms of where this market looks to be headed. Monthly sector rotation. Well, once again here, it looks like consumer staples is the area that I think still presents some of the greatest value. I'm going to give you some ideas for me that I'm looking at, maybe from a bullish standpoint here as we get a little bit lower in the marketplace. I don't know, obviously. I don't think anybody knows if we've bottomed out or not. But we're certainly at better valuations and better prices right now than we were just even a week ago, right? So there are some opportunities, I think, to start picking through and looking for some longs. And I'll give you some of my ideas there in just a little bit. The heat map, not terribly unchanged from week to week here. A little bit of a mixed bag last week, but obviously the techs continue to get hit. And we'll see. You know, they've really probably been more oversold than any other area of the marketplace these last few days. They had a big rebound on Friday. Obviously, this is a weekly heat map, so it doesn't just take into account what happened on Friday, but what happened all week long. So we'll see if that can continue to flow over the next couple of days. The last week in the market's obviously ugly. 2 weeks ago was obviously ugly. Last week, ugly as well. Markets continue to get hammered pretty well. And it was a pretty much across the board downward move, which again implies that you've got a broad-based sell-off. You look at a week that was like the previous week, got a little bit of a mixed bag, and even if it wasn't, you know, all of these just being in a negative position, even if some of those were up, you can see that basically the divergence between them percentage-wise is pretty big. It's pretty evenly dispersed this last week, which again, to me, would imply that we've still got some more downside ahead of us. We do look at the put-call ratio. Obviously, that gives us a little bit of a gauge in terms of market sentiment and whether the market is leaning bearish or bullish. Above 1 is usually considered bearish. And again, our index put-call ratio is around 1.17. So again, still a little bit of a bearish bias in the marketplace. You can see the open interest chart from the SPX. Number one, a lot more activity on the put side than the call side. That's where all the action is. Really, at almost all of the strike prices is the put volume, far outseeding the call volume. But again, that 4,000 level is a big level. That 4,000 level is a big demarcation point. And we've got another level down just around this 3,900. So again, a lot of pressure to the downside here. We are seeing more of that than we have seen in quite a while. Expected moves, not really that much different this week versus last week. Last week's expected move was about 136 points. This week we're looking at 133. I was just looking at some old data from November of last year, and the number was around 62. So we are not double, we are more than double the volatility and expected moves that we had really not that long ago, just a few months ago. So again, this is just absolute nirvana. This is absolute perfection for the type of trading that we do. This is what we want. We want volatility, we want movement. And it looks like it is here to stay. The heat map, again, it does look like we're starting to get into a little bit, or at least attempting to get into a little bit of a consolidation zone here. We really just were demoralized from a bullish standpoint right in here as we were able to, over the last week, break down below that sort of double, triple, or even quadruple support level down here that we had and just continue to push down. We pushed down basically right to that 38.50 level. We pushed right down to basically a 20% correction in the marketplace, which is, of course, the definitive definition of what a bear market is. We held that level. We pushed right back up again. You see most of the indicators, again, are still bearish, but they're leveling out a little bit. So we'll see if we can find some support areas here or if we'll just continue on down. We do look at the fear and greed in sentiment reading as sort of a contrarian indicator. We were talking about this in our trading room the other day. Someone was asking why the VIX, why the volatility index hasn't really spiked more. And you can see, well, that's one factor in the fear and greed sentiment reading, but there's also a lot of other things that go into that. And we don't really have, or at least we haven't had to this point, real true capitulation in the marketplace. And we've had a couple days that'll look close, but we're not quite there yet. However, we are finally into that extreme fear zone. You can see that we dropped from 41 a month ago. Now we're all the way down this week to 12. That's about as low a reading as we have seen in a very, very long time. And that might imply that we might be looking at that capitulation here very quickly and maybe potentially a bottom. Of course, the fear-greed sentiment reading is a contrarian indicator. And generally, the more extreme the fear, the lower the fear ratio goes, generally the better the opportunity is to buy. Conversely, when we have extreme greed, that's a good time to be selling in the marketplace. So we'll see how that continues to play out. I've got some things on my watch list that I'm watching for this week's trading opportunities. You may want to take a look at them as well. These are all things that I'm looking at from a long perspective. These are companies that all have a 5-year growth rate average of better than 50% a year. So these are companies that are basically just growing like crazy. You can see some names on here. You can see Roku on there. Hood is on there. There's quite a few on here that you can see that have really been taken to the woodshed and beaten up quite badly, primarily in this tech sell-off over the last few weeks. And if you're interested in looking at dipping your toe into the waters, trying to find some long opportunities, this might be an area right here to start your research and check that out. I know that it's going to be probably where I'm going to be going for a couple of our bonus trades this week in our live trading room. Monday trading opportunities. Well, we don't have a lot of news coming out on Monday, but we do have the Fed. Williams will be speaking in the morning. You never know what that's going to bring to the table. Of course, Mondays are always a busy day for us as we restart most of our trades. We'll obviously be focusing on a 0 DTE on Monday, but we'll also be reinitiating our IWM credit strangle and our 4 DTEs on the SPY and the Q. Looking at a potential bonus trade on Tuesday afternoon, just maybe right before the market closes or an hour or so, somewhere right in that power hour time of the day. Looking at putting on another 1 DTE overnight index trade. We've got one on right now that we put on with the E-mini futures here, just a couple of hours ago for tomorrow's expiration. So that's the agenda for Monday. Pretty typical to what we usually do on a Monday. On Tuesday, a couple of news items coming out. We do have retail sales out an hour prior to the cash open and industrial production out just right before the cash open. Those can be market moving items sometimes. We'll have to take a look at that. But we do have Fed speak going on pretty much all day with Chairman Powell also speaking. He's going to be speaking starting about 2 hours prior to the close. So that'll be something to keep on your watch and your radar as well. We'll see how that pans out. If it does make anything happen, we will be prepared for it. Core trading ideas for Tuesday. Well, we're back into our specialized 0 DTE days. So Tuesdays and Thursdays, just to sort of remind you, we have a little bit different approach to our 0 DTEs. These are a little less oversight, less maintenance, less worry. They're kind of easy to throw on. Very nice risk-reward ratios, and we start with the butterfly. Don't always end with the butterfly, but that's what we start them with. We'll do one of those on Tuesday. We do have 2 wheel trades, very straightforward wheel trades, bullish trades that we're going to be looking at on Tuesday as part of our bonus trading session, and probably going to be pulling from those names that I just showed you a minute ago that were my favorites watch list numbers for this week. Of course, obviously on Tuesday we'll be back in the live scalping room with the live Zoom feed there, so that will be our focus for the Zoom session on Tuesday. Looking again at another potential bonus trade overnight, be a 1DTE overnight index trade. That's something that we take a look at again right around the power hour with about an hour left in the day. We want to look at the market bias going into the close. We want to look at premium, want to look at expected moves and all that good stuff and see if we feel good about it. So that's not always a given that we're going to get that 1DTE in, but that's obviously our goal. Okay, so that's Tuesday's price action. Wednesday, we do have crude oil inventory numbers coming out an hour after the cash open, and we've got housing starts an hour prior to the cash open. Housing starts doesn't necessarily always move the market or give us fluctuations, but we'll be out on the lookout for it. We do, as you know, have a crude oil trade going on right now inside of our model portfolio. It looks really solid, and it happens to be expiring on Tuesday, just a day before this. So we will most likely wait for those crude oil inventory numbers coming out on Wednesday, and then we will go ahead and reinitiate our oil trade. Now, we won't probably use the CL this time, the futures contract, because it does only have monthly expiration. So on our new iteration of our oil trade for this week, we'll probably be back to the USO, has a little bit more frequent expiration dates. And then, of course, Wednesday, we're back to our normal 0DTE index trade, as we always do. Potential bonus trade overnight, looking again at a 1DTE overnight index trade. We've got on the SPX, on the S&P, we've got daily expirations now. So pretty much every day, we're either doing a 0DTE or a 1DTE. Thursday, we do have some jobless claims numbers coming out in the morning before the cash open. All of our softs, corn, wheat, soybeans, and our nat gas, which we have positions in most of these right now. All of those sales numbers are going to be coming out in the morning time. So we're going to need to keep an eye on those. We may very well need to do some enhancements on some of those trades, probably wheat more than any of the other ones. We also have existing home sales out a half hour after the cash opens. So for Thursday's trading ideas, well, we're back to a 0DTE day, but we're going to be doing it again with the butterflies. Those Tuesday, Thursday sessions are a little bit different approach. And then for our main bonus trade on Thursday, we're back to a dragonfly neutral trade. It's been a while since we've done a dragonfly trade. I love them. They're one of my favorite trades, and we just haven't done one for a while. They do usually have a little bit longer expiration date, and the volatility of the marketplace has just made it a little tougher to put those on. But we're going to be looking to do one on Thursday. And of course, again, Thursday, we are back in the scalping room all day long. My pitch for scalping, guys, there's not a lot of a lot of work. It's very tedious, but there's not a lot of places that you can take $5,000 of capital and really have a decent shot at making $1,000 in profit on the day. So that's what our goal is going to be for Tuesday here and Thursday. Bonus trades, again, back into this world where with daily expirations now on the SPX, we can put on either a 0DTE or a 1DTE, and we'll be looking to do that again on Thursday afternoon for a Friday expiration. Friday trading day, not a lot in terms of pre-planned or anticipated news items that would necessarily move the market. Obviously, we're back to a 0DTE day, and we may also take a look at doing a 0DTE on Friday with an equity, with an actual stock. And there's a couple different ways that we might play that idea. So that's kind of the overview for our trading for this week. Let's get into our updated performances and look at where we have been and what we've tallied over this last week. Obviously, our 0 DTE, that's sort of the premier trade that we focus on. We're up to 56 days of trading opportunities this year with 0 DTE. We've done 95 total trades. 93 of them have been winners, 3 have been losers. And again, I always remember to, or try to remember to reference you guys to the private video review link. Every single day in our live trading room, we do record everything that we do. So if you miss it, or you just simply want to review one of the educational sessions that we have, or some of the trades that we put together, make sure and click that link. If you go to the top of Discord, in the trade only chat channel, it's a mouthful. You go into that channel, you go to the very top and click the pin. You can pull down the list and access all of our trading videos. Our 4 DTE trade on both the SPY and the Qs, we're sitting at 75 wins, 7 losses. That's dating back to inception, back at the end of 2020. Our IWM weekly credit strangle trade, 18 total trade opportunities, or 18 total weeks, I guess you could say, of trading opportunities. We've done 19 total trades. You say, well, how do you do that? Well, we did have a double dip last week. I think it's the first time this year that we've done that with our IWM credit strangles, where we put it on Monday, took it off and booked a profit on Wednesday, put it back on Thursday, and booked another profit with the expiration of it on Friday. So 19 total trades, all 19 of them been winners, no losers. Our pairs trades, we put on 3 brand new pairs trades last week. So we've got 19 total trades that we've done this year. 16 of them have been winners. We haven't had any losers. We do still have 3, as I said, that are open and working that we just put on. Again, these trades generally are 30 to 45 day long trades and maturities, and so they do take some time sometimes to mature. And we usually ratio them along the way to try to push them or help them or nudge them into that profit zone. Bear market trades, we've done 68 total bear market trades. 64 of them have been winners with 3 losers. We did just put a brand new one on Merck last week. And so that one's just getting up and running now, just starting to work for us. Our new iteration of the 0 DTs that we do on Tuesday, Thursdays, where we initiate with the butterfly. We've done 4 of those now. That number should start to pick up here now, as we have every Tuesday and Thursday an opportunity to do these. But we've only done 4 so far. All 4 of them have been winners. We haven't had any losers. And last week, our return on that trade was just a little bit better than 15%. Nice trade there. I think we just did one on Tuesday. Scalping results for last week from me. It was kind of a woulda, coulda, shoulda week. Tuesday ended up $250 to the plus side, but was up over $1,200 at one point, and probably should have just stopped at that point. Gave a lot of that back in the chop later in the day. And then Thursday was a solid day. Really just absolutely pretty much a picture perfect day. Ran some really good tight stop losses, took the profits pretty quick, incurred a lot of fees and commissions on that day because the trade volume was almost double what it usually is. But nevertheless, it worked out quite well for scalping for my account last week. Asymmetric trading system, oh my goodness. Obviously last year, 2021, was an amazing year. We absolutely dominated the market and did it at less risk. Well, we're doing it again this year, guys. We are doing it again this year. We are ahead of the market right now in terms of results, and we are clocking in right now at closer to 75% less risk in the AST program. So it's doing everything that we needed to do. Now, I did add a brand new column or category here today, and that is the dragonflies and the double diagonals. Now, We've done dragonflies before here in the trading room, but we've done them very infrequently, and so we're going to start keeping a little bit better track of these. We're going to start doing some more of them, and I don't think we've ever done a double diagonal here inside of our live trading room. So we're going to start to keep track of those, set up an individual channel for them in our trading room, and I'm excited to see how those go. They're a little different in terms of how you structure a dragonfly versus a double diagonal, but the idea with them is essentially the same. Just maybe a way to get sort of the same bias, if you will, to an iron condor, but with a little bit better protection. It's kind of the idea there. So we'll be putting some of those trades together, hopefully here over the next few weeks and ensuing months. Okay. Bonus trading gifts for you guys. Pretty excited about this, guys. I am pretty darn excited. So this has been sort of a passion project for me, kicking around in my head for, oh my goodness, half a decade. And it is the website, the mother of all tradinglinks.com. I've had that URL forever, and I just have never done anything with it. And my goal here, and what I would like to accomplish, is set up a free website that's sort of a one-stop shop, a place where anybody can go and get access to good trading information, good trading links, good trading downloads, good trading software, people to follow on YouTube, people to follow on Twitter, websites, you name it. If you have a good source for trading information, I'd like to have you help us out building this website. Now, I'll do the building of the website, but I'd love for you to kick in and help us with the links that you have found to be beneficial for you as a trader. So I do have up on this channel right here, the YouTube channel, I got a little video about this. And if you would be so kind, I would really appreciate it. I think everybody would appreciate it if you would take a moment and make a comment in the comments section about, again, a website link or a source of information, podcast, whatever it is that you feel like other traders can benefit from. Now, ideally, we would like to have free links. We want this to be free, but there are possibly some areas that might be subscription-based or things that you might feel that they're valuable enough to pay money for. So we'll have a category for subscription-based or paid links, but the focus hopefully will be primarily on free access to great information. So again, if you could be so kind as to check that video out as well and contribute to that, we'll start building that out over the next few months. And I'm excited to bring that to the trading community. I think it'll benefit all of us. And then in addition to that, I do have one other bonus for all of you in the trading channel, the bonus trading channel. And that is a nice PDF that was put together some time ago on taking control of your emotions as a trader. So be sure to click the link on that and download it and read it. I think it'll be helpful for you guys in terms of your trading. Links and support, you can always stay in touch with me, and I look forward to that. Whether it is the YouTube channel, my Twitter link, setting up a one-on-one Zoom session with me in Calendly, emailing me, our private Facebook group, setting up a free 2-week trial to the AST program, setting up a weekly free trial to the live trading room, or getting into the scalping room where we scalp every Tuesday and Thursday. Whatever it is, I'd love to touch base with you guys, love to hear from you, love to chat with you. So that's pretty much our action plan for the week, friends. Again, I was just thinking about this passion project of building a website with free links and free access to great resources for all of us as traders. I really do think Zig Ziglar had it right. He said you can get everything in life you want if you'll just help enough other people get what they want. And I think the more we can all pitch in and contribute to that website, obviously the more value there will be, and that benefits all of us. So again, guys, thank you so much. Appreciate you. And it looks like we are going to have a busy start to the week tomorrow morning. So I'll see all you guys bright and early in the live trading room. Take care. Appreciate you. Have a good rest of your Sunday evening.